Emmanuel Odiaka, the CEO at ECOB Capital, joins me now for a market update. Emmanuel, it's a pleasure to have you on the program today. So clearly, we are seeing that selling interest because there is that expectation that it's just fair to, or should I say prudent, to err on the side of caution and wait for the outcome of the T-bill auction to see how that will impact liquidity. But maybe we can start with getting your perspective on the T-bill auction and what you expect in terms of the outcome.
Thank you for having me, Wally. Yes, there was a T-bill auction yesterday already, and the results are out there. We saw a huge leap in the 364-day paper printout, and it rose from previous 9.49% to 14.74%. So we are talking about an effective yield of more than 17% for a short-term paper. This outcome was as a result of the illiquidity in the system. Market as of yesterday closed at about 316 billion naira in repo. And previously, before the auction on Wednesday, market was already in repo of over 500 billion naira. So it wasn't entirely surprising to market participants that there was that surge in NTB printout for the paper compared to the previous at 9.49%. However, market unexpectedly wasn't expecting that much leap. People were speculating 200 basis points from previous, but it was a little bit shock to market. But it is what it is, and for investors that won at 14.74%, it's a good outcome. Yes, there's been some sell-off. The sell-offs commenced, like you highlighted, before the NTB auction, because market in itself was tight already, following previous week's bond auction, where the DMOs sold a total of 563 billion across 4 maturities. Unexpectedly, that was a huge one in the market, coupled with ongoing cash reserve ratio debit every other Friday by the Apex Bank. So yes, the inflation figures added a bit to this drama, but market has been largely driven by liquidity conditions, and we have seen it play out yesterday.
Okay, so if we take a look back over the last couple of years, there has been a move towards what many have described as an unorthodox monetary policy by the monetary authorities in Nigeria. And the big question is, when are the authorities likely to move back to the more orthodox policies? You obviously would know the usage of OMO bills, for example. We haven't seen a lot of that recently. Instead, we've seen more of the use of the cash reserve ratio. In your view, as the authorities try to normalize the markets, if you like, what do you think will be the likely impact on, for example, interest rates, liquidity, and so forth?
Thank you. That's a very valid observation. Well, it's been very, very unorthodox, very, very unusual. However, yes, one could say that we are beginning to see policy normalization in inflation targeting. Then let's not forget that inflation, as at February, printed at 21.9% levels, which is a very, very huge high. And we saw the Apex Bank increase the monetary policy rate from 17.5 to 18%, just in its last outcome, in its last meeting. So going forward, I think one of the drivers the market will be looking out keenly is what happens with fuel subsidy. Yes, we have seen the budget deficit. Of course, that would most likely be funded from the domestic market. But the fuel subsidy rings a bell very strongly, because if that happens, expectedly, we are going to see a major impact on transportation costs, on food costs. The first subsidy removal is going to highlight a whole lot of cost increment items across. So that's a red flag for market participants. However, with the way the Apex Bank has continued to manage cash reserve ratio debits, one would likely expect that with a new dispensation, a new administration being ushered in May, we could see major shift in policy direction.
Right.
We could see major argumentative shifts from market participants to ease the tightness in the market, so banks could have some breather of air and have some liquidity to fund the real sector.
All right, Emmanuel, thank you so much for your perspective today. Emmanuel Odiaka is the CEO of ECOB Capital.